Bitcoin bears are starting to step in and it's showing. So what I want to go over is what can we do now to really take advantage of this dip and any further potential dips that we can see in Bitcoin going forward, right? Because right now things are getting finally they're getting bearish and we're below the 120 moving average. And this is very good because if we want to see all-time highs in a as predictable as possible manner while keeping our trades realistic and making as much cash as we can within this rest of the bull market that we have the rest of this year. We all know, right, before I actually get into the charts, and it's kind of funny because I talked about this yesterday and I gave you guys a little bit of this poorly drawn timeline and how public events and headlines affect the price even when there's anticipation and a lot of hype and just positivity going on. It does not always mean that the price has to rally up. And that's another thing too. I'm just gonna say this real quick. It's kind of like, there's a lot of hype and FOMO, and the price is already high, right? The price is high, and you have all this hype and FOMO, and a lot of people start to buy in. And then it dips, it drops, and people are just, if you were too scared to buy at a crazy discount, why would you not? Why would you be okay with buying at such short-term premium levels? But yeah, Bitcoin price sells off after Trump U.S. China deal or tariff deal, and it explain they explain why it drops. But I talked about this yesterday. I'm like, hey, and so many other videos before. I said, hey, we keep extending the price higher short term. We're not just within the fib extension area for this breakout that we had to the upside, breaking all of these previous resistances. I said I would be cautious to be overly optimistic as we try to max out this green area. When we're above it, I kept saying like, hey, we have two significant resistance areas, and that's trying to approach this yellow line, which confirms the downtrend for this move. So that's acting as a resistance. And then I said, well, even if we were to break this, we still have all-time highs as a potential resistance to continue to see fluctuations, right? So what we have now and how I'm personally approaching this, and in my personal opinion, I'm not being biased or anything, I believe is the most reasonable and the most responsible way of trading, especially accumulating longs as we're beginning this descent into lower prices. So I'm going to go ahead and cover that as well. I'm actually going to move this a little bit because we had a little bit of a pump, and I also explained this too. It's kind of funny. I kept saying, even when the news does come out and it's official, we might see a quick like fake out pump. I said this yesterday, and then boom, we start falling, and it's all falling into place perfectly. So here's what I'm doing, right? What I am doing is, I told you guys, I am not interested in accumulating longs if we break below this 102K 300 area until we hit this blue area. So I have a small long position that I began accumulating the moment the price hit this area. I've been watching this price closely today, this chart, I should say, and we broke into it. I bought, so we started trending up higher. We still have bearish momentum, but that's the beauty of managing your position size and buying in softly to, and with anticipation of the price going lower. So what I'm looking at right now is that we have this resistance, which can act as potential support right here. If we come down to the bottom of this retracement area, what we have is not just support right here at this, pretty much at the bottom of the retracement area, but we also have the possibility of filling in these imbalance areas right here. So this one's filled. We still have to fill this one and this one, and we'll have a really, really strong fill. I'm not saying the price is going to go up from here, but I'm saying what we could see is fluctuative moves, consolidation within this area, potentially even since we topped out right here, we can still see a three-wave move down into here. And what that can look like is potentially, so we can come down in the first wave, the second wave, and then the third wave. Now, the second wave can either come up to this consolidation area or even try to fill in this super small imbalance, which is not significant whatsoever. or it can even try to do a double top before bottoming out. And that's what I'm trying to approach with. And I'm going to tell you guys where my stop losses are as well. We can either see this or, like I said, come up and then do something like that. So we can easily see fluctuative moves, consolidation, and the price going down lower. Now, this pattern does not have to happen, but what I am, give me a sec here so I can delete that. Okay, so what I'm looking for is price to come down lower, continue to accumulate small long positions until we hit this bottom and potentially have this pump up. Try to get out because the 120 moving average also supports the price to come up. If it were to come down here, it will be very separate from the 120 moving average. We come up to it, we start flirting with the 120 moving average again before we come down. So the objective for me with these small positions will be to capture that quick pump as I average in lower, get the pump and then sell out profit and then wait again to purchase at the proper discounted area down here in red. I said this yesterday too, where we know that Bitcoin, especially in the 1 hour chart, but even in the 4 hour chart too, and some others, we see Bitcoin even during uptrend moves, it likes to flirt with the 120 average, the 120 moving average quite a bit. Even in bearish moves and bullish moves, we see it like dance around the 120 moving average quite a bit. So what I'm personally looking at is what is the possibility or how likely is it really to see the price dance around it a little bit as it attempts to come down and have a proper retracement, maybe hit this support level right here before we continue to go up much, much higher. And I think it's very likely because we've seen it go up quite a bit. If we see consolidation within this blue, then we can easily try to hit that 120 moving average as a strong sell signal. And then, before we come down any lower, of course, as well, at the same time, I ideally want to see the price come down here. And I am very confident that the price will to fill in these previous imbalances, but also to finally have a proper retracement around that 0.5 retracement area, which currently is around 90K. The reason being is because last time we had a proper retracement around that 0.5 retracement was right here with this move higher. We came down, filled in imbalance, hit the 0.5 retracement, and then we started pushing up higher. We haven't seen that happen at all for a while since that example I showed you. So seeing the overall bigger move finally come down, flirt around 90, it can possibly even come down to the lower, mid 80s before it goes up much higher. So this can easily be filled completely. The thing is though, there is still a lot of short-term optimism. So that's why I want to try to capture this kind of fluctuative move before we come down higher. Before we come down lower. And then once we do, I want to conserve capital so I can be able to purchase this at this area and then, ride the move, back up to previous resistances and try to meet up all-time high. So I don't think that's going to happen for a little bit because this move down can take some time. We can see consolidation, maybe like a bullish fake out or any kind of pattern as it moves down. And this can take a while. This can probably even take the rest of the month potentially as well. So it can take a few weeks. I'm just being realistic with it because we know these like retracements or these consolidation moves and kind of the price trying to balance itself out after seeing a big rally is it takes time. Last time we saw a massive rally like this one right here, it took, we were actually starting to bottom out to potentially go up higher, but we had negative tariff news, just fearing the market, and that made us go into a new structure and some lower prices. And now we're trying to break out of it. But this consolidation move was trying to factor in this aggressive rally, and it was taking a while. I wouldn't be surprised if this whole move begins to, the price tries to factor it in and kind of balance it out. We can be around 100K, potentially even lower for a little bit before we start going up higher. But that's why I'm not, going to force any crazy trades. Instead, buying at the next support area or accumulating towards the next support area, sell out at any signs of weakness as we try to do like a double top potentially. And the moment with the stop loss, the moment the price breaks below this support line, right here. So I'm gonna give you guys a number actually. The moment the price breaks below 97,800, the gateways to the red retracement area opens up very, very clearly, and we can easily see the price go from here down to here, um, very easily. At least I personally think it could go from here to here very easily, as it comes down and tries to maybe trade within these levels that we saw some consolidation here as well. So very, very easy. So I do not want to hold positions below 97.8K. Instead, I want to get out, take a small loss, and conserve all that capital to purchase at a much better price. But if that doesn't happen and we continue to see support hold above 97.8K, then I want to capture the fluctuative consolidation, ups and downs within this price range right here between like roughly 97 to like 110K, potentially all the way up there. We can see we can even see the price go up, try to retest this area one more time before it can come down, or even try to retest all-time highs before it comes down into a proper retracement. But since there's so many different pathways and I can't really just choose one because I can't tell the future, what I'm doing, I'm trading based off of RSI. I'm trading based off of the 120 moving average, where we are on either on the lower or the upper side of it, and what the price is doing when it comes to interacting with any retracement areas that we have right here and potential supports. So yeah, I did accumulate some Bitcoin, or some Bitcoin ETFs, and I very, very lightly. I'm not taking any large positions until we have a proper retracement. I'm going hard, big position sizing within the red down here. Until then, I'm taking small trades, and I will get out the moment the price goes back up to, roughly 104K, back at, some strong selling area up here. Until then, I will continue to accumulate within the blue for that pump, so that I can sell back at previous resistance. And if the price does break below 97.8K, I'll be out, taking a very small loss, nothing significant in my portfolio, and then I'll be, accumulating more aggressively with that conserved capital within the red. So I believe this is a very good and a very personally just a very responsible way of trading, because I am anticipating lower prices, but at the same time I'm taking realistic trades when it comes to position sizing and any continued fluctuations. We can even see the price easily going into tomorrow jump up, maybe try to reach halfway into the 103K, so around 103.5, to fill in this imbalance before, so it can look something like this. It can come up here before it continues and then tries to make another low, and then we'll see how the price reacts in this area. So this is all just very good, right? Very good. And I'm not going to continuously be accumulating a ton of exposure. I'll be adding. So I added right here the moment we broke into the blue. If we go up here, great. I'll probably sell a portion of the position and add that portion back if we come down to 99.2K or even 99.5K potentially, as we reach the 0.5 retracement in this area. So I'll probably be selling close to half of the position here, locking in some profit. And then I will only add again if the price comes down into the 0.5 retracement in blue, which will be 99.2K. If the price continues to go up higher, great, I will still have exposure and max out my profit a bit more into this area. And then I'll be looking to sell in this area in the yellow line to, lock in more profit and conserve capital in case we do have another aggressive dip that can happen very quickly like we saw here. So that's just how I'm approaching this. I don't really see a lot of negatives in this, just because, again, position sizing is very controlled. I know where I'm buying. I know where I'm getting out of the trade worst scenario, and I know exactly where I'm looking to start shaving the position, starting here, shaving the position and shaving more as the price does its thing. So I'm very much prepared for whichever direction it goes. Although ideally, again, one more time, ideally, I would like to see the price do something like this, where it's a three-wave move. So, first wave down to find support, second wave up back into previous consolidation areas. So I can either be in the lower boundaries here or it can be a little higher here. But regardless, I would like to see the price end up coming here and then it coming down, having that final third wave into the red area before we finally start going up much, much higher. And that's how I'm approaching it. Until then, I'll keep you guys updated, and I'll keep updating you guys on how I'm managing this chart. So then, hopefully, maybe one person maybe learn something from it. Rather, it's reminding you guys to watch your position sizing, risk tolerance, understand that you don't need to force trades, instead of wait for your buy and sell signals to hit. And we'll continue to watch this chart together as the price fluctuates to finally have a filled in correction, or proper retracement, before we can finally start seeing new all-time highs and much, much higher. So again, yeah, guys, there's also nothing wrong with, like, you can still make a decent return even if you're going with small positions to manage your risk properly, because making some profits, still making a decent percentage and not being greedy with it, is a really nice return, instead of being super greedy, knowing the possibility of short-term lower prices is possible before we go much higher. That sucks a lot more, writing it down and then just waiting, than to know where to get out, know how much to put in, and then trade the structures rather than trade emotions and hope, right? So yeah, I'll catch you guys in the next one, and take care.